Is it better to invest in cheap stocks or quality stocks? In this video, you're going to find out which one is the better investment for you if you want to produce good investment returns over the long run. Okay, so my name is Bloomin and I'm the co-founder of the Fifth Person. Okay, so at Fifth Person, we invest in great businesses, be it for dividends or capital gain. My job here is to help retail investors to do the same so that they can grow their wealth safely and consistently over the long run. Okay, so let's begin. If I were to ask you one simple question, which of the following companies is cheaper for you to invest in, given that you need to buy a minimum lot size of 1? Okay, meaning to say that if you were to invest in A is going to cost you $12,800 because one lot is equal to 100 shares. If you were to invest in B is going to cost you $2,500 per lot. If you were to invest in C, it's going to cost you only $18 per lot. Okay, what would your answer be? And if your answer is C, and you're like most people, because C, when you buy into that, you get a lot more shares, because therefore it's a lot cheaper to invest in C versus B or A. Okay, so it is normal. Unfortunately, in the stock market investing, that's not how you value a stock, or that's not how you determine whether a stock is expensive or cheap, just by looking at the share prices alone. Okay, so first let me explain to you how most investors view cheap stock as cheap. Cheap stocks are commonly known as penny stocks, and they are typically traded in pennies. In Singapore, these stocks are typically traded at less than 20 cents, and in Malaysia, they are typically traded less than 1 ringgit. And in the US, they are typically known as penny stock if they are traded at less than $5. The reason why it's $5 because in the US, you can actually invest in one share, whereas in Malaysia and Singapore, typically you need to have a minimum lot size of 100 shares per lot. Okay, and in Hong Kong, typically the share that is classified as penny stock are typically in the range of less than Hong Kong dollars, less than 50 cents. Some examples of cheap stocks are this company called Digiland. Okay, so I first heard of this company from my friend, and she was sharing with me she bought this company back in 2007. Okay, so this company used to be a distributor of some electronic stuff, and her broker actually told her that the company share price dropped from all-time high of 6.5 cents all the way to 4 cents, and if she were to invest her money at 4 cents and the price go back up to 6.5 cents, she's going to make 60% in terms of return. Okay, so she actually trusted her broker and invested her money, and of course her broker also offered her some insights about the company that the share price is going to rise back up to 6.5 cents. Okay, so she invested close to 30,000 of her money, and as she shared with me this story, of course I went to check the price of the Digiland, and at the time it closed at about 0.1 cent. Okay, so from 4 cents to 0.1 cents, she actually lost a lot of money in this company. The key point I want to share with you here is that penny stocks are typically traded in less than 20 cents, and they are a lot cheaper to buy, and a lot of investors like them, and that's the reason why brokers often use them as a target to attract investors to invest into such type of companies so that they can actually make money from those companies. But oftentimes they don't, because these companies, as I checked back from 2005 2006, the company was actually loss making. Okay, so it is a lousy company, and that's the reason why they are traded in less than 20 cents. Another example of penny stocks that I can give you is this company called Bloomin. Okay, so this is one of the companies that a lot of my friends who don't do investing suddenly come and ask me about this particular stock, because someone told him that the price of this company will rise from $2 all the way to $3, because when you look at the price at the point of time, this company was trading at only 3 cents, and the prices started to go up from 3 cents to 50 cents to $1 to $1.50 and $2 within a period of less than a year. Okay, so my friends got interested because they heard rumors that this company share price will continue to run as they clinch on more project. Okay, so this is one of the classic case where it was very popular back then, where the company share price suddenly tanked from $2.50 all the way to the floor. Okay, and a lot of investors actually lost money. And what happened here is that this company is basically a classic pump and dump, where the operator will buy the shares of Bloomin at, let's say, 3 cents, 2 cents, and then he started to sell his share into another company that he owns at 3 cents, at 4 cents, 5 cents, and eventually inflated the whole price. But his cost price is, on the end of the day, is only like 3 cents. And when he started to send out rumors to a lot of investors, and the investors start to see the prices start to go up, they are also interested to invest. And that is the reason why my friend came and asked me about this in particular investment. Okay, so the whole thing just collapsed, and the point here is that penny stocks are easily manipulated, so you need to be very, very careful because they are traded in cents, and it's very easy for operator to manipulate and send out false news about that company. Okay, so don't be a victim of these companies. On the other hand, we have quality stocks. Okay, so these are the stocks that tend to have a very good business model, and their business may be quite resilient in good time or bad times. Typically, they have some form of economic advantage as compared to their competitors, so they are able to differentiate between their products and services as compared to the competitors. They are superior, okay, and they have some form of pricing power, and of course, they also have the long runway to grow. The business will be able to expand into other markets, and sometimes there are management who are very aligned with you, and typically if you combine good business and good management, you will oftentimes produce good financial results. Once all these trees are ticked, okay, these are quality stock. Typically they don't come at cheap valuations like what we have seen in the penny stock. They are traded typically in pennies. These are the companies that you may see them that is traded at a few dollars in the Singapore context. In Malaysia, you're talking about tens or 200 ringgit. Okay, in the US, some companies may be traded at thousands dollars per share. If you invest in them, you will be able to sleep peacefully at night. That's the reason why they are traded at the premium. Okay, and sometimes, of course, if you can find this company that is traded at a right price, which is the fair valuation, typically you can make money from this company. This is one of the quality stocks that I used to own, and that is ARA Asset Management. Okay, so they are in the business of managing assets for real estate investment trusts, so they actually earn a fixed percentage of their revenue on a recurring basis. Okay, so at the time when I invested in them, about 70% of their revenues are actually recurring in nature. And if you look back in the 08-09 crisis, this company continued to deliver growth in terms of revenue as well as profit. And back in 2011, when during the Euro debt crisis, this company also delivered a very solid and sustainable result for the shareholders because of their fixed recurring fees that they earn on a year-to-year basis. Okay, so this is one of the companies that I have owned and had benefited a lot until they got privatized. It has actually delivered me a double-digit return on a year-to-year basis for my portfolio. Another quality stock that we used to own is this company called Hartalega. Okay, so this is one of the companies that pioneer nitride gloves. Okay, so it's the allergy-free glove where a lot of doctors actually wear them to examine their patients, and they are one of the lowest cost producer. And if you compare their margin with their competitors, they are one of the highest gross profit margin. Okay, so they are also run by good people. And at the time when we found this company, it was trading at fair valuation. We actually bought it as an investment. Okay, and so far it has delivered us double-digit return on investment. Okay, so I can give you more example of quality stock, but I believe you get the point where quality stock tends to deliver sustainable profit and growing profit. And at the end of the day, the price will continue to perform. Let me summarize briefly here the difference between cheap stocks and quality stock. Okay, so cheap stocks typically in terms of volatility is a lot higher. So if you invest in them, the share prices can go up and down in a matter of days. Okay, so if you invest in quality stock, on the other hand, the volatility is a lot lower. So this is suitable for those people who doesn't want to have heart attack. Okay, so and also if you compare the risk, cheap stock typically come with higher risk, and whereas for quality stocks typically come with lower risk. And the reason is because this quality stock typically have a proven business model, and there's actually cash generative for the company, whereas for cheap stock typically, if you invest in them, are typically based on rumors, and the companies that you invested in are typically loss-making business. Okay, and in terms of return, of course, cheap stocks typically don't make good return, and I have not heard of anyone who actually make good return by investing into penny stocks. Okay, so unless you are the operator of the pump and dump scheme, otherwise I think most of the time you should lose money in the penny stock. Okay, whereas for quality stock typically the returns is a lot more predictable because they have good business model and the business are actually on the expansion stage. Okay, so I hope by now you are clear which one is a better investment for you, and I think the answer is quite obvious. Okay, and if you enjoy this video, please remember to share it with your friends. And if you want to have more investment sites, insights or investment tips, please visit fifthperson.com. And once again, this is Bloomin from Fifth Person, and I hope to see you soon.